What is going on, YouTube, and welcome to a video where I'm going to explain to you guys what are prop firms and then how to scale them. And this is kind of for people. Wait, hold on, let me get the pen out. This is kind of for people who have no clue what the hell this is, or new to trading, or just are in trading and just don't know what the hell funded accounts are. And if you don't know what funded accounts are, bro, I feel so bad for you, because this is probably the best way for experienced and even inexperienced traders to step foot into the market, just to have an edge without them losing their entire capital. You know what I mean? Prop firms, they let you trade with their own money. They are a company that will give you their capital to trade with, and obviously they get something from it. We'll get to it in a little bit. When you actually make money, you split profits with them, so everybody is winning. Now let's get to challenges. So prop firms basically give you a bunch of challenge account. People call them evals, evaluation accounts. You basically pay a fee to enter the evaluation, and this is how prop firms filter out serious traders and people that actually want it from just people that think this is like easy, quick money, which 100% it's not, right? It's like an audition and not an investment. You are auditioning to be even able to make money. You are auditioning. This is not like you buy the account and you automatically start getting payouts and money. No, you actually have to pass a challenge in order to be even eligible to make money. You know what I mean? So challenges come in the form of accounts. So they have different account sizes. You have a lot of prop firms, they have like 50Ks, they have 100Ks, they have 150, even some have 200. And these are basically the account capital sizes, right? This is how much size you have to trade with. Usually a lot of firms, for a 50K, they charge like $100. For 100,000 accounts, they charge like 120, 150. For 150 accounts, they charge like maybe 150 or more. I don't know. Depends on the account. And this basically gives you access to this much in trading money. You don't have the entire 50K or the 100K or the 150K to work with. You actually realistically have this much. So for 50K accounts, you have like 2,000 to work with. For 100K accounts, you have like 3,000 to work with. And for 150,000 accounts, you have like 4.5-ish K to work with. And this is where a lot of people mistake, thinking they have like this much money to trade with, which in reality, no. If you lose this amount, you blow the account. So going on to the next topic related to that, challenges have profit targets. So for 50K accounts, there's like a profit target of like 3K usually. A lot of people actually fail in this stage of prop firms because they don't know how to risk manage. They don't know how to control their emotions. They think it's gambling, and they think they're just gonna make money, crazy money, become a millionaire fast without actually having to put in work. This is actually how prop firms make a lot of their money in the first place. It's just stupid people coming in, blowing accounts, and those fees just go straight to the prop firm. So they're like, all right, bet another retard came in and just blew his money on us. So it's like, shit, that's great, right? So let's say you pass or fail the account. If you pass, you move to the funded stage. You are officially a funded trader. You have access to their capital and you are eligible for payouts. If you fail, however, you lose the fee and you have to restart all over again. You lose the account, you paid their fee, which is, whether it be 50, 100, whatever, that much, you lose that money. It's gone, right? And then you have to restart. You have to buy new accounts if you want to keep going. Obviously, if you are serious, you have to buy a new account. You have to do the challenge all over again. You have to get funded all over again. Request payouts all over again, right? And a lot of people fail because they have over trading or they have poor discipline. They don't have good risk management. They don't have good psychology. They don't have anything, right? So it depends. So obviously, if you fail, you lose the fee. And then if you pass, you are officially funded. Now, in the funded stage, you trade with the firm's capital, bro. You don't have that much money. You just, obviously, like what we said right here, you have this much money to work with. So you still have to follow the rules. You still have to use your same strategy that you used to even get funded in the first place, right? Don't switch up anything now, right? This is where you could start earning real payouts. In the funded stage, they will give you like 5 days, 3 days consistency, you need to make a certain amount of money. Like usually it's like $200 or more for that day. If you are profitable for those 5 days, you can request your payout and start making money, bro. Now, trading with the firm's capital, you do the exact same strategy you used to get funded. It's just you just have more capital now, and you have to follow tighter rules, because obviously prop firms are not going to make it easy for you. It has to be a challenge for you to make money, just like with anything in life, right? People don't realize that small wins every single day consistently is way better than big wins, but very rarely. You know what I mean? Big wins very rarely, and having a lot of losses is equivalent to gambling. Say this dude has a P&L calendar where every single one of these days he's making like $200, right? 200, 300. And then in the end of the month, he ends up with a 10K balance, and he could withdraw that. Easy. His entire thing is green. Freaking Gatorade green, easy lime green, bro, right? But then you have this dude where he's making like losses every single day, but then on the days he's making wins, he's making big wins. Like he's having like 14K days, right? 14K day right here, 14K day right here. But then he has so many more losses than he does wins. His win rate is not that high, but when he does get a win, he gets a lot of money. His P&L for the end of the month could be something like 1K compared to this guy's 10K. Consistency is always key. It gets you way farther than chasing big dopamine hits like this dude. You know what I mean? Now comes the payout. You follow your rules, you got to the end of the week, you have those 5 winning days, and now you are eligible for a payout. So what prop firms usually do is, after your first like 10K of requested money, after that they take like a percentage, like 90-10 split or like an 80-20 split. So they take a percentage of your earnings, right? Usually you just put your email in and then whatever information, and they send it to your account within a few days, some within even a few hours. And yeah, that's basically what it is. And then the split is automatically done. They take it before they pay you out. Some people lose their entire life savings just blowing money on accounts because they think it's so cheap, it's so easily disposable that they can do whatever they want. And they end up blowing their entire life savings, their freaking kids' college tuitions on a freaking funded account, bro. So you gotta respect the drawdown. You have to respect the daily loss, because one mistake can literally ruin your entire freaking funded account, bro. One mistake. Bro, you could have like a 8K freaking balance. Then what? You lose 2K. And then after that, you revenge trade. You lose another 2K. You're like, bro, I cannot be down 4K for the day. I have to make it back. I'll probably make more back. Boom. You enter the trade. You get clapped. Your booty cheeks get clapped. Boom, another 2K. And then another 2K. And then suddenly your account balance is 0. And then now you're guilty, and now you're tripping, and you're like, damn, I shouldn't have taken that second trade. I should have just took the L with my first 2K. I should have just went and journaled what I did wrong instead of trying to make it back. That's just how it is. That's how prop firms get you. They take advantage of your psychology and they make money off you, bro. It's a dangerous game. It's not easy, bro. It is not easy at all. People find out about funded accounts and think they're freaking Jesus, bro. Like, ain't no way, bro. You are not special, bro. You are not special. You are not different from anyone else. Your psychology, human nature, when you see money, you get crazy, bro. Greed is a real thing. You are either an ongoing trader or you get terminated and you quit trading forever. Either you're consistent, you can scale your accounts, you can make a lot of money, or you break rules, your account gets closed, and you make no money. This, when you're consistent, you could scale accounts, you make money. This is only 1% of the entire population. 1% of everybody who tries day trading. The rest is 99, bro. Fail rate in trading is so freaking high, you don't even understand. This is equivalent, making it in trading is equivalent to becoming a professional athlete. I know that might be controversial, but it is completely true. There's a very high loss rate in trading. Now, you have to be consistent, stack your payouts, don't chase stupid dopamine rush, right? If you follow your rules, if you have discipline, if you have confidence in your strategy, you will make money. But if you don't, if you go in without any plan, it is no different from you entering a casino in Vegas on the strip and just gambling your way through like blackjack or something. You are no different from that. Trading is an art, bro. Trading is a skill. You either master that skill or you take your ass to the freaking Las Vegas strip and just gamble away. You know what I mean? Hopefully this explained it for you guys. Hopefully this made it easy for you guys to understand. I will see you boys on the next video. Peace out.